Okay, welcome to the Crypto Giant channel, where you get the latest information with regards to cryptocurrency, specifically looking at Bitcoin, which is the biggest cryptocurrency in terms of market capitalization. Please don't forget to subscribe to this channel. Press on the subscription icon below and also click on the notification icon so that you can get notification whenever I upload videos. In this video, I'm just going to be looking at something very interesting, which still makes gold ahead of Bitcoin, which is called the stock to flow ratio. Because Bitcoin is also referred as gold 2.0, I'm going to look at this parameter. Why is gold still ahead of Bitcoin? And just to also see if Bitcoin will it ever catch up with gold. So just please watch this video until the end. There's very interesting information that I'll be sharing with you. Thank you. Okay, before I explain this concept which still puts gold ahead of Bitcoin, let me take you through this paragraph in this article. It basically says gold isn't as valuable because it is so rare, but quite the opposite. Gold is valued so highly because annual production relative to the existing stock is so small. If I read that again, gold is valued so highly because annual production relative to the existing stock is so small. Putting it differently, this is what it basically means. Not only scarcity, but primarily the relative constancy of the available stock is what makes gold unique. This characteristics was attained over centuries and can no longer be altered. This stability and security is crucial precondition for creating confidence. This stability and security is crucial precondition for creating confidence. Basically, what does this mean? I want to explain to you in terms of a formula. This basically means this is represented by a formula for stock to flow ratio, which is basically a ratio between your total stock over the annual production. So if we relate this to gold, it means the total stock, the amount of gold which is available in the market on surface, relative to the annual production of gold. So it's basically that ratio. It's the ratio of the amount of stocks which are available on surface divided by the annual production of gold. Yeah. So if you look at this equation, basically if your annual production increases, your stock to flow ratio will drop. If your annual production increases, the stock to flow ratio will drop. So what happens with gold? There's numbers which you can also get on the internet. Currently, the gold stock to flow ratio is about 66. It's about 66 years. This basically means that the amount of stock of gold which is there in the market it's relative to about 66 years. If you look at the annual production of gold. And if you look at the stock to flow ratio for silver, that's about 22 years. So if you compare the two, your gold and silver, it means that gold, it's more resistant with regards to silver because there's more available stocks in the surface, which means if there can be a ramp up in the annual production, gold, there will be less volatility or response in the price of gold with relative to silver. If I explain that again, it means that if you compare the two, gold and silver, if there's a ramp up in the annual production for gold, because there's so much available stock in the market, it won't be felt. There will be less volatility in the price of gold. So gold is more resistant to the response of supply. That's basically what it means when you're comparing it to silver. If you compare it to platinum has a stock to flow ratio of 1.1. It means that if there's a supply response or an increase in your annual production of platinum, because the stock to flow ratio is very low, it will be felt on the price. So the price the price volatility is very high. So if there's an increase in the annual production, because the stock to flow ratio is very low, it will be felt in the price, and the price will drop drastically. So and also if you look at palladium, it's even lower. The stock to flow ratio, it's even lower than the one for platinum. So it means basically these commodities, your platinum and palladium, you cannot use them, or it's very risky to use them as a store of value. You cannot use them as a store as a store of value, because a response in an increase in the response, the production response, will definitely cause the price of these commodities to drastically move, and in that regard, it will move lower. So let me compare now the gold to Bitcoin stock to flow ratio. Bitcoin was formed in 2009. I calculated the flow to for the period of 2012 to 20, and also from 2016 to from 2020 to 25, from 2025 to 2030. Okay, the stock to flow ratio for gold, it's predominantly, it's on average, it's more or less the same. It hovers around about 60 to 66%. So it's more or less that. It will be more or less constant. But with Bitcoin, halves every 4 years. The supply of Bitcoins halves every 4 years. So the annual production of Bitcoin halves every 4 years. So it's not a fixed number. That number halves every 4 years. So from the first 4 years when Bitcoin was established, there's about 10.5 million Bitcoins which was supplied to the market. The second period, from 2016, there was about Bitcoins which was supplied, so it was half that number, and it halves every 4 years. The Bitcoin blockchain halves every 4 years. So if you take that into consideration, from the period of 2012 to 2016, the stock to flow ratio of Bitcoin was about 12. So silver was more resistant than Bitcoin if you compare the two. The response for the supply response. For the period of 2016 to 2020, the ratio of Bitcoin it's increased to 28. And from 2020 to 2025, it will increase to 60. So what is interesting, at that period from 2020 to 2025, the stock to flow ratio of Bitcoin and gold will be more or less the same. And 25 to 2030, the ratio will be higher than that of gold. What this means is Bitcoin will be a better store of value than gold from 2025 to 2030. And this is a very important number which people who invest in gold, which use gold as a store of value, look at, because the supply response of Bitcoin, which is a fixed number, will have less impact in the price of Bitcoin. So Bitcoin will be a better store of value compared to gold. I also put this graphically so that it's understood much more easier. If you look at this graphical view, the to flow ratio, it's more or less the same. Its average is about 60 to 66%. That's where it is. And also the stock to flow ratio of silver, it's about 22%. It's about 22 years. So it also remains constant. But with Bitcoin, because the Bitcoin blockchain halves every 4 years, the number it almost doubles every 4 years. So in the period of 2016, that was 12.
it's 28. It's from 2025. It will be 60. Only be more or less the same with gold. But from the period of 2025 to 2030, Bitcoin stock to flow ratio will surpass, and of means that Bitcoin will be a better store of value. Principle, it will be a better store of value than gold. And this is why Bitcoin, it is referred to as gold 2.0. It is gold in steroids. And people who use gold as a store of value will start to move their wealth in terms of gold because they know where Bitcoin is headed. But also, just to also show you that Bitcoin is still in its early stages, and that the adoption for Bitcoin is increasing. On this article, they show the countries amount of Bitcoin ATMs which are available in different countries. So it's Bitcoin's ATMs by country. So the country which has the most Bitcoin ATMs, it's the United States. It has about 3,930 Bitcoins ATMs, followed by Canada, which has about 715 ATMs. It's United Kingdom. It has about 279 ATMs. This basically means that I can book a flight to USA and don't have to exchange my currency, which is a South African rand because I'm from South Africa, to a US dollar. I don't have to go through that bureaucracy of changing my South African rand, going to banks and exchanging it. I just go to USA with my Bitcoins in my Bitcoin wallet. I arrive I find a Bitcoin ATM where I withdraw US dollars, and the transactional fees are minimum, and there's less bureaucracy, so there's less time which I spend standing in queues. It's mostly convenient. So there's a number of countries. The adoption for Bitcoin is increasing. There's a number of countries worldwide which are starting to have Bitcoin ATMs. In my country, which is South Africa, there's ATMs. South Africa. So that increase, and then as I explained, there's only just one property which gold still is ahead of Bitcoin, which is the stock to flow ratio, which means it's more the supply response of Bitcoin of gold will have less impact in the price. So the price will not vary that much in response to the supply response. So there's more confidence to go for gold, but that will change next year, because the stock to flow ratio for Bitcoin next year will be the same as gold, and in the year 2025 to 2030 the stock to flow ratio for Bitcoin will surpass that of gold. So Bitcoin will be a much better asset to act as a store of value. Thank you.